Good morning everyone and welcome to Morning Markets from True Potential. Today we'll focus in on just the performance of equity markets over the course of August, which was a good month for asset markets in general. We saw equity markets across the piece really increase about 2% over the course of the month, with the strongest performance coming in from the Nasdaq in the US, up around 4%. Just looking at yesterday's performance in equity markets, a slightly weaker day just to round off the month in August, primarily in Europe, where we saw some comments from a number of ECB members ahead of the governing meeting next week, discussing some of the potential opportunities to rein back on the support that's being provided to the European economies at this point in time. Unsurprisingly, it's coming from those members that one would say are probably more conservative in their view. We cast our mind back to the discussions of the Frugal Four last year. It was primarily German and Dutch ministers yesterday, really highlighting the fact that maybe now is the time to rein back a little bit of that support. Oddly enough, it did come on the same day as we saw Eurozone inflation expectations continue to increase. So if we look at the expectation for August, inflation, as you can see in the chart below, is forecast to come in around 3% year on year, a significant increase from that 2.2% that we saw in July, and also ahead of the ECB's target of 2%. Again, thinking back to the comments that we made yesterday, a large part of that inflationary backdrop is seen as being transitory or temporary. If we look at that and dig into that Eurozone number from yesterday, you can see just in the table as well that large impact that the energy price increases have had. Energy costs, the main component there, increasing some 15.4% year on year. If we exclude energy from the picture, actually the inflation rate comes back below that 2% that the ECB have been discussing. Just also looking at Asian markets overnight, we discussed yesterday the official manufacturing PMI from China. We've had the Caixin manufacturing data today, which is a private sector survey, showing a very similar trend, deceleration in the sentiment survey, coming in below 50 for manufacturing for the first time in a number of months. I think we have to go back to April of last year to get a similar reading. So again, that's just that impact of, as we discussed, Delta variant, increasing supply chain bottlenecks, just impacting manufacturing sentiment there. Didn't impact markets. Asset markets the 1st of September in Asia have got off to a positive start, and that's fed into European and US futures at this point in time. I'll leave it there. Please do join us again tomorrow. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.